Hello, welcome to the Monthly Market Review. I'm Todd Clark. After an up and down ride at the end of the month, the sharp market correction, while scary for some, also presented some opportunities for investors. To learn more about why the volatility happened and how our risk budget portfolios performed and what's in store for the rest of the year, here are Paula Week and Rusty Vanneman.
Thanks, Todd. Rusty, it's been a rough week, to say
It
the
has
least.
been, I know, a month. It's been a crazy month, right?
Yeah.
We had our first correction since 2011. We had our first 6-day losing streak since last year, the worst one-day loss in years, worst two-day loss in years. A lot of things going on.
Why do you think that the correction happened?
Well, it was just due, and we haven't had a correction since 2011. And I think it's just kind of natural and normal and we kind of forget that the markets have volatility. They go up and they go down. I think there were a lot of reasons in the press mentioned for it, overrated in my opinion, and I think there's some other reasons not really talked about in the press. So a good example is Chinese growth.
Right.
Have we not heard Chinese growth has been slowing for how long now?
For years.
I know.
Yeah.
And then Federal Reserve, when are they going to tighten? Has this not been a story for years?
For years.
Exactly.
Yes.
So that wasn't really new information, but stuff that happens all the time. First of all, it's that time of year, seasonals. The market usually is kind of flattish, might move back this time of year. That's normal. Politics in the news again. And a lot of times the election rhetoric is out there, and there's a lot of it right now. The market's also spin their wheels. So these are totally normal things. One other item, though, earnings growth has been weak. Again, we've been talking about it for a while, and it's now expected to be negative 11% year over year into the third quarter. I think that probably was underplayed, if anything. But anyway, it's normal for the markets to have a correction, in my opinion.
Yes, absolutely. How did our portfolios hold up? Did you want to talk to viewers a little bit about how our portfolios performed?
Well, CLS portfolios performed as they should have. They have risk budget expectations, and everything was in line with expectations, if not better. And then if you factor in that initial rebound, again, I thought we did pretty well, all things considered, during this time of market turbulence.
Yeah, I was happy. I was very happy with how portfolios performed, for sure. So, Rusty, what do you think is going to happen going forward? What should investors expect? What should they take of all this?
Well, I think that there's a couple things. I mean, first of all, expect more volatility. What we saw earlier this year, that was the exceptional thing. Volatility was exceptionally light. We had our tightest 6-month trading range in stock market history. I mean, it was bound to break out. We were bound to get volatility. I think it's reasonable to expect more volatility. And don't be surprised if we hit new lows from what we hit here, a couple weeks ago. So expect more volatility, number one. On the other side, in terms of return expectations, something we've been talking about all along, even though markets have come back, they're still kind of richly priced in terms of valuation. So return expectations should be modest, particularly for the U.S. markets. International markets look a lot more attractive. They still do.
Right.
And I think even the natural resource area, energy stocks, also look pretty attractive as well. So I think expect higher volatility and have modest return expectations.
And I would imagine our portfolios will probably look for opportunities to increase our exposure to some of
absolutely.
those areas.
Great point. I
So,
mean, it's
yeah.
something you talk about too. I mean, volatility is very destabilizing for a lot of investors, but it's really opportunity to enhance portfolios, do anything from take tax losses to just upgrade it. And there's a lot of things we can do.
And then, Rusty, you had some really good tips for investors from Jason Zweig's article as far as...
He's great.
Yeah, recommendations for staying invested for the long term, not to panic, that kind of thing. Very important for readers to check out. So please check out Rusty's weekly market review on our website. Thank you.